Hola, comrades.
What can I say? It's never a dull moment in the world's largest casino. As I'm filming this, we're not only heading into the final week of the month, but also of the quarter, which is a giant transitional period. And in my humble opinion, I truly believe that the overall market is transitioning from a bearish phase to a bullish phase, and we are this far away from that perfect dip buy opportunity. So in this video, I'll be breaking down all the stats, facts, and figures of seasonality, the options chain, and all the major macroeconomic events you should be paying attention to, and I'll be giving my own game plan of if certain things align, I really think it'll be that perfect dip buy. The second thing that I want to talk about in this video is one particular equity that I think is going to outperform the overall market in the short term because I see it setting up like a legitimate launch pad, and then I check the short interest and realize that there's $16 billion betting against it, and if these shorts soon realize that they're on the wrong side of the trade, I see a lot of potential upside. So if you enjoy these types of market breakdowns, don't forget to like, subscribe, all that good jazz. And with that being said, let's rock. When the stock market officially closed on the day and the week, here was the headline. S&P 500 ekes out a gain on Friday and snaps a 4-week losing run. Hey, a little bit of green. Right here you can see on the intraday basis, it actually looked even stronger. We see the SPY and the Qs just kind of ripping all day. And even though the SPY technically had a red day, even though the Qs had a small green day, hey, we're going to celebrate it when we can. After 4 red weeks in a row, the overall market, the S&P 500, finally putting in a slight green week. And the question here, is this the base? Is this the foundation that we're going to be building off of to pop all the way higher? And in my opinion, as of right now, what we're currently seeing, I believe the answer to that is yes. So to set this all up, let's start off with the seasonality. We know late March and pretty much all of April from a historic standpoint over the past 30 years is dominated by the bulls. Is seasonality the end all be all? Is it a guarantee? Absolutely not, but it does give you a good idea of the tailwinds that are going to be supporting you or the potential headwinds you're going to be running into based on the side of the trade that you're taking. So once again, we know late March, all of April dominated by the bulls, and this is 30 years worth of data. Now, when I was looking at this seasonality data, but on a shorter time frame, I found something very interesting that I think you guys should all know about. Over the past 5 years, March on a monthly basis has been slightly bullish. But if you look at the weekly, we're coming into week 13 right here, which actually happens to be the second most bullish week of the entire year over the past 5 years. So yes, obviously I want to share that. It's later in the year where you have the 1 week that beats it. But over the past 5 years, so a little bit of recency bias, but yes, I do want to let you know the second most bullish week of the entire year. And then just for those of you who are curious, in the newsletter, macros.locals.com, I do give you the seasonality for each individual day. If you scroll down, you're going to see Monday, it is actually won by the bears, but then Tuesday, Wednesday, and Thursday of this upcoming week, definitely bullish. And then at the end of the week, ending on a little bit of a sour bearish note. As I said, obviously seasonality is not the end all be all because of course you have major events, and this upcoming week is no different. Check this out. We're going to get the manufacturing and services PMI on Monday. We're going to get consumer confidence on Tuesday, durable goods on Wednesday, the GDP and initial jobless claims on Thursday, and then on Friday, we have the PCE report. This is the big inflation report that according to the Fed, they weigh the most when deciding what to do with the Fed fund rate and overall monetary policy. So to put that another way, literally every single day of this upcoming week has a big data drop that clearly could impact the overall market in either a bullish or a bearish manner. So at this point, we're heading into a week that we know is seasonally bullish. We have a lot of macroeconomic events. The next logical question is, how is the market setting up? And this is what I find to be very, very surprising. On the screen right now is spot gamma. The white line is the underlying price of the S&P 500. And then the two colorized lines are just the delta movement, as in if it's going up, the options market is getting more bullish. And if it's going down, the delta is dropping, i.e. the market is getting more bearish. You can see the 0DT on Friday and also the all expirations put together got very, very bullish into the end of the day. Now, I was doing a very big deep dive into the overall option chain, and coming into this week, it was dominated by the bears. On the 0DT, the weekly, the monthly, it didn't matter where you looked, the puts were dominant. Now that quadruple witching has passed on Friday, and all of those contracts were rolled, and just basically a big shift in the underlying derivatives market, we're seeing that, yes, on a decent amount of the time frames, the puts are still dominant, but it's now just barely. There's been a big shift in some calls are starting to pick up, but more so, we're seeing the put side capitulate. They're simply just disappearing. So at this point, depending on what time frame you're looking at, there's a good chance that the puts are dominant, but if we were to look at it as a gauge, they are clearly losing their power, they're losing their lead, and I think it's going to come to an end this Friday. Why do I think this Friday? Because that's when the JP Morgan collar position ends up expiring, and the put leg of their collar position is at 5565 on the SPX. I could show you that right here. We're currently trading at 5667, as in 100 points above, but let me mark this out. 5565, roughly where I'm dropping that right now. This is the put side of JP Morgan's collar position expiring this Friday. That is the last leftover major put position that we know will be concluding this Friday. So I'm going to be watching that, not only in terms of are they going to be transitioning into and like where are they going to punt it later, but this week, how we interact with that level. At this point, we're decently far enough away from it that I don't think there's going to be much gamma influence on it. But as we get closer, it very much could act as a magnet and really just stop any movement to the upside or the downside, truly just like a black hole of a situation. But that's if we get close to it. That's if we get pulled into the gravity of this particular situation, which based on the conclusion of Wednesday, maybe not. I mean, we just put in our first green week, albeit it was a small green week, but the bulls are starting to actually finally fight back. We're not only seeing that in price action, and I cannot make this clear enough, but we're seeing it in the options market. Of course, this week, next week, if I ever see a big transition, like all of a sudden the bulls are officially the dominant one, I'll happily let you know, but that's going to be the major thing I'm looking for. And if we see it, it will most likely be associated with a technical breakout. So I do want to let you know, as of right now, the major open interest levels we're seeing to the upside is 5,700 flat, which surprise, is like literally the wicks from this past week. And then above that, 5,750. In the short term, those are the major open interest levels being played. And then for those of you who are a little bit more negative Nancy's and you're like, nope, there's more pain still coming, I would say the major open interest level to pay attention to is 5,600. To the downside, that's the big OI level. And then obviously to the upside, 5,700, 5,750. Above those levels, things get legitimately bullish. And then of course, below 5,600, it will go from a little bearish right now to clearly dominantly bearish. But there's one thing I really want to talk about, and it's a particular individual equity. First off, you should know that earnings season isn't technically going on right now, but there might be ones you're paying attention to, such as Rumble, such as GameStop, Chewy, Lululemon. So feel free to screenshot this, do what you want. But this brings me to my point, and it's not even an earnings play right now, but I see one stock, Elon Musk's brainchild, old Tesla, ticker symbol TSLA, that is ripe for a pop. And let me explain why I think it is. First of all, we know that Elon associated with Trump and the administration. So you either really like that or you really hate that. Very polarizing. Obviously, we see the stock recently has been taking a huge hit, but recently we have Tim Walz, who is kind of talking some smack on it. And I do think from a retail trader perspective, that could actually end up being a very big thing, because everyone likes to troll the troll.
Saying on my phone, I know some of you know this on the iPhone, they've got that little stock app. I added Tesla to it to give me a little boost during the day. 225 and dropping. So, and if you own one, we're not blaming you. You can take dental floss and pull the Tesla thing off, and take out, just telling you.
Obviously, a little bit weird that he's rooting for an American-based company to go down. And what's more crazy about it is you realize he's rooting against his own people. Governor Tim Walz openly celebrates watching Tesla stock plummet, apparently unaware or unconcerned that his own state has nearly 2 million Tesla shares in pension funds. While Walz gets his mood boost watching the stocks fall, Minnesota retirees face the consequences of his political vendetta. According to the Minnesota State Board of Investment, Minnesota has 0.5% of all Tesla shares. So the governor, the dude running the show, is stoked that his own people are losing money. That's the absurd situation that we are currently at in modern day politics. So anyway, back to my major point. When I see things like this, I know that the internet loves to troll the troll. So I bring up the stock, I look at it. Obviously, Tesla's a stock that I've been following for years and years and years. Like I said, down 50%, year to date down 30%. And then I look at the technicals and I say, okay, this is potentially a bottoming formation. After a bit of a puke, unfortunately, right here, we've kind of just been going sideways ever since mid-March, potentially putting in a higher low. And I'm looking for really a potential turnaround where if it does break out, you have minimal risk, risking either this Tuesday, March 18th low or the year-to-date low. But regardless, you have minimal risk and potential high reward. Do I have a crystal ball telling me how this is going to play out? Absolutely not. But I just look at it as a risk-reward situation, and the reward is quite a bit more than the risk. But of course, any good degenerate trader worth their salt wouldn't just stop there simply looking at risk-reward. Of course, that's something you have to consider. But now you want to think about the odds. Like, do you have a legitimate chance of this going in your favor? So then I bring up the options market, and this is impressive. Obviously, for a lot of this video, I've been talking about how the overall stock market, really the S&P 500, was bearish controlled, and the bears are losing their control and the bulls are starting to gain a little bit here. Tesla was even more extreme, clearly dominated by the bears, just getting pummeled and pummeled and pummeled. But over the past week, it has switched. If you look at what's going on for the weeklies, the monthlies, the quarterlies, it went from clearly put dominated to now call dominated. So when I was talking about the market, the overall market, I was saying, oh, it's like the bulls are almost there. It's already there on Tesla, even though the price is beat up. As of this past week, the chain has officially gone from being put dominated to call dominated, as in big money is now looking to play this back to the upside rather than to the downside. But the fun doesn't stop there. Of course, I have to see how much potential fuel this has to go to the upside. And I come to Ortex and I realize that there's $16 billion betting against this. As in, the people betting against this, if they start to feel that they're wrong, if this was the bottom and we start to trend up, they're obviously going to quickly run for the doors because they don't want to see their profits dwindle or their losses start to mount up. But if they start to see that, oh, this was the official low and we trend up, that's a lot of money that's going to have to disappear and let it actually officially ride back up. So risk reward perspective, there's not that much risk to the downside. There's quite a bit of reward to the upside. We see the options market went from being put dominated to call dominated. I see $16 billion that might have to exit if they admit that they're wrong. And then the sprinkles on top would be to tie it into the political drama of the day, where I think we all know that Wall Street loves to dunk on trolls such as this. Honestly, Tim might be the reason that this actually bottomed. So there's various things I'll be paying attention to with it, but man, oh man, this is a ripe opportunity. So I wanted to break it down for all of you. Of course, I'm already playing it. I have Tesla my long-term account. I have now a short-term call position. So am I talking my own book? Potentially, but that's my reasoning for it. There's minimal risk. There's high reward. Options market is now bullish. I see $16 billion worth of shorts that could get squeezed out. And then I just know how the political machine works. And we have someone like Tim Walz stoked that it's going down, hurting his own people. But then we have Howard Lutnick, the U.S. Secretary of Commerce, legitimately telling people to buy. So man, oh man, I think there could be fireworks here. And on that particular note, I would love your thoughts on Tesla. Are you buying this dip? And hey, while you're there in the comment section anyway, let me know if you agree with me or if you disagree with me of the dip in the overall market that we're this close to it. Obviously, that's what I have for you. So I appreciate your time. I appreciate your good vibes. I'll catch you in the live stream throughout the week. I hope you crush the market. Thank you, thank you, thank you. Catch you in the next one.